Good evening, and it is the 7th of December, and 2 days away from our exams, and effectively this should be the last night. Let's see what happens when the room is populated. So, just about to start the share screen, and get to our question for tonight once people start entering the room. So nobody in the room yet, even though I have started the recording. Very interesting. So actually started early before people have arrived. Let's see. I could probably pause the recording and continue when people arrive. Good night, Amar there. So I was recording before anybody else was in the room, and then realized that didn't make too much sense. So I put that on pause, waiting for people to get to the room there. So I was chatting to myself and hoping this would have been our final night. Would you wish to be doing any chatting tomorrow night or not? Or would you like to be with your own thoughts the night before the exam? Amar, what do you think?
I think I'll sleep early and relax, yes.
Yes, definitely sleep early, definitely. Yeah, so I think that's a plan. So again, we'll verify with the others. If not, if people still want to chat, I think if I could have a general chat instead of studiously doing one particular question, which is what we've been doing. As of course, the combination of all the individual questions to build the entire knowledge. That's what we want at the end of the day. So the night before, you need to have some sort of condensation of things going on. All right, so I'll throw that out to the room. We could have a short chat in the last minute jitters. That's about it. But I don't think we should be doing a full question. All right, leave that for tonight. So, however, I do have an early appointment, so I'm trying to see that we finish earlier here. All right, people joining in. Very good. Good night, ladies. We have Anita and Stacy joining us here now. So I was just chatting with Amar and saying that tonight would be our last night for doing a full question as such. And if people wish to still chat tomorrow night, which is again the night before the exam, I would probably host general queries and not do this studious amount of work that we're doing with one question at a time. Right. So again, I'll leave that as a vote towards the end. If people want to have a general chat or just relax for the evening and say their prayers and all the best for Friday. So we'll discuss that again towards the end. So keep that in mind with whichever one you choose. But I wouldn't wish to be doing another whole question. All right. Now, of course, during the day tomorrow, I would also be available. So do send any chat messages in the chat, and I could respond. Even if I have to use email to respond in detail, I could also do so. Right. So, who's that joining there? Kanisa. Good night, Kanisa. So we're just about to start. And did people get a chance to read the question? Yes, especially all the people on time off. Stacy, how's your time off? You took the sick leave? No, oh no, Stacy was working all week then. That's not good, Stacy. All right, so, oh no. All right, well, all your hard work from all the weeks before would now have to prove itself, right? So that still not all hope is lost. We still have time to consolidate all the knowledge and give it a good go. All right, so let's begin the next question without further ado. Question 45. So, having given all this data, Vogel, listed company, manufactures large-scale plant and machinery for industrial companies, and until 10 years ago, now this sort of funny English that they're starting us off with, until 10 years ago, the company pursued a strategy of organic growth. So what does that mean? Did this organic growth stop? What do we think? Again, the language, we have to deal with this language. Did the organic growth stop? Right, so that's again what we have to be able to gather. So this has stopped. Good. Since then, it has now followed an aggressive policy of acquiring small engineering companies, which it feels has developed new technologies and methods which could be useful for itself. So you go about taking over people. However, it is estimated that only between 30 and 40% of the acquisitions made in the last 10 years have successfully increased the company's shareholder value. Now that's just horrid. But however, that is the regular rate of success for these things, right? And with that introduction, I will skip now through all of the data being given on the two companies. Some great detail here being given, as well as in a paragraph up here. When they do acquire, upon acquisition, all the relevant action that's taken place between the companies. And further down, all of this other information, lots of reading, which is usual at the P4 level, up to 7, 8 notes being given, and to our requirements. Discuss possible reasons why the company V may have switched its strategy from organic. So here again, we have been confirming that they have switched the strategy from organic to acquiring, right? So do people remember that? That should be basic theory or textbook theory. Yes or no? Yeah, right. So make sure that those 4 marks don't give you any trouble. And again, we'll start off, unlike the exam format again, we'll start off with the part C, which is a computation. But in the exam, you must do your A first, and of course your B second. All of the theory, try to deal with all of that, capture those marks, because again, that's close to half of what you need for the question. Anything you do for the calculation after that should push you over the 50% line. So, B, discuss possible actions that they could take to now reduce the risk that the acquisition fails, right? So, have this history of failing and theory again, right? Now, it may or may not be straight from the book, but it is stuff that you will need to now be able to pull out, right? So I have those, as usual, we'll look through it, look for some fluff. I did read it. It didn't seem like it has too much fluff. What I didn't like is the format of it, where some of the paragraphs are quite large. So you want to break those up again into your small paragraphs with your 1 or 2 complete sentences, which makes the point, and then skip a line so that your points stand out clearly. So let's deal with the tricky bits of the calculation first, which again, if you have all the time in the world, it wouldn't really be so bad, but it is not so. And you're faced with 3 hours and in a time pressure, you have to now deal with this part C. Estimate, showing all relevant calculations that you can, the maximum premium that Vogel could pay to acquire Torico. Explaining, of course, the approach that you choose to take, any assumptions, etc. So again, marks for these things called assumptions. Let me just flash to your marking guide there. And that's up to 2 for this piece here alone, assumptions, 2 to 3 marks. So that means only 11 marks going for this calculation. So by all means, even before you start that up calculations, you want to be attacking those 2 to 3 marks. All right. Now, if I take that 3 out of the 14, that will clearly be more than half the marks in this question for the written bits. Is everybody following that? All right. Of course, explaining the approach. Explain the approach here again. So this clearly is simply the narration which we are trying to do all the time. And this, if that gets you another 2 marks maximum, so it was from 1 to 2. So if you spend time doing these explanations and you max out the explanation marks 3, you max out this narration marks 2, that's 5 from 14. So the marks available from the calculation now, the time that you're trying to bust your brain to try and figure this out, has been reduced. The impact of that calculation can very much be well below the half mark, right? And this is the mindset that I need you all to be attacking this exam with. Now, of course, if you didn't remember any of these topic points for A and B, then you're not even going to choose this question, right? So you have to be well prepared in terms of the knowledge base, which Stacey promised me she would do when she started that study school, and she has not taken any of this study leave, and I'm getting worried about Stacey, but that's all right. I'm sure Stacey will pull through, and she will get some magic done between now and Friday. Right, Stacey? Yes? Good. So all this theory, which is, again, the textbook knowledge, the background knowledge, it will serve you well once you, very good. Again, as people are home, I know Kenesa is home as well, or in school. I will be in Chancellor's tomorrow if Kenesa wants to harass me there. And do send any notes or messages, Stacey, tomorrow. I don't have much to do tomorrow. I might be setting another assignment for another class, but I will be free to handle queries per se all day. Right? I don't want to do too much in the night. Let's try and get more communication done during the day. Right? Amar, are you at home tomorrow? And Anita? Yes, Anita. How much time have you had? All week you were home? Yes, very good. So hopefully some good work has been done. And I cannot emphasize enough that you need to focus on your theory bits. All right. Yeah, I know it goes, Anita. Life goes on. I mean, I know we have kids. I had myself study with my one girl there, and she's like 10. That's how it goes. Yeah, I know, but give it your best shot. Give it your best shot, and let's see where it goes. So I've only been missing Natalie. I don't know. I'll probably send her some communication tomorrow, see what's her position. Right. So get work done. Get work done. I myself never, thinking of my recent history where I did that MSc about 3 years ago. I was never really fully prepared, so didn't get all the best grades, but they were always above 50. So it's time. Once you put in the time and the effort and you do the background work, the pass is there. It's just the level of the pass now. All right, so let's get to this. How approach? Let's deal with the approach first. So let's get this 2 marks, which is exactly the narration that we've been doing all the time. You're being asked to calculate this maximum premium. Any ideas? What is the approach that we're going to be looking at for this question? Approach. How would you identify this maximum premium? Anybody? Anybody? Look at the valuation. Yeah, value what, Amar? You need to be more specific. These phrases, which I'm trying to get people away from. Sentences, give me sentences. So valuatory, what else? CAPM model, calculate KE. All right. So how is the K going to help us with the value? Value Tory based on market values. Market values. Now that will come from reading the detail in the question. If we had market values here. Not too sure I remember reading any market values from T. Kenisa, did you read the whole question? Market values of Tory. And you saw market values of Tory? Tell me where you see market values of Tory. And I should also harass Anita for that answer. What are the components? No. You can't get away with that, Kanisa. Tell me what paragraph or which note 6 or note 8 where you see in market value of Tory. Tell me exactly where it is so I could bring it up on the screen and highlight it. And Anita, what are the components of this CAPM model that you want to use? And where are we given it? So Anita, part 5 or note 5? Note 5. So right here, Anita is saying, we have cost of capital, estimated first year, free cash flows. Okay, so you answered half my question to you, Anita. One was where the information came from. So you're showing me cost of capital. But my next or my first question to you, Anita, in explaining your contribution just now was, what are the components of CAPM? What are the bits that we need to look for when we see these things show up in a case? We know we're going to calculate CAPM. RF, right, the risk-free rate and the market risk and or the premium. But Note 5 has not given me those two things, Anita. Did you see RF or RM anywhere else in the question? And I'm still waiting for Kanisa to tell me where she found market value. You see, Kanisa changed her story now. Running to the PE, which is the correct thing, right? So we do not have the market value of Tory. I would show you that we have here the market value of Vogel. So Vogel's current share price is 3 per share. That's market value, but that is for Vogel. So you need to get your thoughts in alignment, people, so that in coming up with something, we need to be in alignment with the data. In other words, the data will push us in the right direction. We just have to take the hints from the question, and that's going to generate our method. All right, so Kinesia is now starting to spark there. And Anita, are you following the argument that we actually don't have data to calculate CAPM, right? Yes, Kanisa, let's see Kanisa's argument now. Tory is calculated on a percentage of Vogel, that's fine. But you cannot now come with a phrase in our chat room and tell me that we have the market value of Tory. If you said market value of Vogel, right, so I understand Anita's quick on the draw there, not a problem. So, yeah, you do need to have had a full read of the question before you could actually get into posting a method. That's all right, Anita. I'm just trying to get structure into people's thoughts. That's fine. Right, so back to Kanisa's argument. Kanisa, don't try to argue that. No. It is what you said. You said market value of Tory. It is not the market value of Tory we are calculating, because market value simply means that share price in the market, and we simply don't have that. So market value of Vogel is not really the market value of Tory, right? We're using one to estimate the other. Good? So let's go. We need to get, and again, this is effectively what we just discussed there. Half of the methods in those chapters on mergers and acquisitions. And I noticed Miss Stacy being quiet. Miss Stacy, what do you remember about all these mergers and acquisitions that you keep asking us to do? How would you approach this merger, Miss Stacy? Miss Stacy. No response from Miss Stacy. We'll try to calculate premium to be paid. Okay, good. I like that response from Ms. Stacy there. Let us see. Where you get that P word from, Ms. Stacy? What premium are you talking about? But basically what we were discussing before was going to lead up to that. But Ms. Stacy is starting at the point where my answer would start in terms of what is premium and why should we be focusing on premium? Anybody? What is premium? Premium coffee. Premium liqueurs. What is premium? Premium's the excess. Good. And again, now that is what I call an extreme phrase. He needs to hit me with one word there, right? And again, to build an explanation, people. So the question part C, I'm hoping people could see it here now, that in part C, it told us clearly here that we are looking for this premium, maximum premium. So that there is where our focus begins. So Amara chiming in, the additional that is paid over the regular value, over the current value. If you're stuck in the current value there, Amara, and further to that, the current value of what? Further, the extra paid above the current value of T or Tori, right? So we'll have to find the value of Tori and use that in combining to find, again, the extra amount above that current value of Tori. That is this premium that we will be looking at. Right, so let us start with my narration there. And I did part of it, and didn't get to do all of it, and then 8 o'clock arrived and we had to start. So starting off up here. Maximum premium payable. So much of what we just said. Firstly, identifying what is this premium. It is that additional amount above the current value of the target company, in this case Tori, that the acquirer Vog is willing to pay, right? So that's what I asked us to find, starting off our approach by stating really what we're going to be finding, maximum premium payable. Notice again the heading also does that, very important. So head up your section or you're working so that you know what you're focusing on. Further, identifying that the maximum premium payable for a takeover. Oh yes, definitely. I could send out this to the email group. Not a problem, Anita. Do remind me in the end. So just like last night. Last night, did you get the emails from last night? I know you went on with electricity issues and so on. Yeah, not a problem. That's perfectly fine, Anita. That's again will help me finish faster, which I need to finish a little early tonight because I have to be out by 4:30 in the morning. So not a problem. But did you get the last night stuff, Anita? Oh, okay. So the link is there. That's for the video, but I also sent the email of it as well. Right? So do check for that and let me know. So the maximum premium payable for the takeover would now be equal to the maximum additional value created above, and above what? Above the sum of the current values of the two companies. Now, this is not the only way to get the additional value created, but to me, it's one of the easier ways, and it's also the way the text, the kit answer follow. So, for a third time, this premium will now be calculated as the difference between the total value after the acquisitions less the total value before the acquisition. Now again, emphasizing on the concept of totals so that while we're looking, or because we are looking, as Amar said, for the value above the current value, that's why we must look at the two totals. So the totals before, as they're two independent companies, the totals after, and again, that extra would be the extra amount or the premium that you will be willing to pay for this acquisition. ACQ. That's fixing that typo there, right? So, however, if this total value gain is actually paid out for the acquisition, then the shareholders of the acquirer do not receive any value. Does that make sense? Great. Thanks for that update there, Anita. So does that make sense? If you pay out all your value, the acquirer doesn't get anything, right? So that's an important caveat to throw in. But while we are calculating this maximum, you wouldn't really want to pay that. So that's summarized a second way in the final paragraph here. Thus, shareholders will be unlikely to approve the takeover if all the gains are paid out. However, they will definitely not approve any payment beyond this limit, which will now cause them to incur a loss on the takeover. So while break-even may or may not be acceptable, because that's a maximum limit, definitely wouldn't want to cross that, and that's why we need to find this value. So I didn't really read the question properly, and I didn't go about doing the assumptions yet, so we'll have to take that in towards the end. I jumped into the calculations right after, but again, as we identified when we read the question earlier on, that 3 extra mark for assumptions, you can very well throw that in at this point. So you outline your question, basically asks you for it, which I was just doing this as narration, and only as now reading the question here, I found out that the question actually asked for this. They asked for an explanation of the approach. So whether they asked for it or not, I was trying to guide you all to do this type of narration, right? And you will pick up marks. You will pick up marks for that, whether or not it is explicitly stated in a question like this, all right? So that we were told by the markers in the last training session we had recently this year. And this is how you pass papers, people, right? Deal with your narrations, explain what you're doing. Don't just throw numbers at them. So that's a way to get less marks. So onto the calculation, and then we'll come back and pick up the assumptions if we have to from the get answer. So let's go. Starting off with before the acquisition. So if people have read the question, which I hope people did, you would notice that you have all this information about what's happening. Vog V is currently considering T. And upon acquisition, so this is basically your after scenario, isn't it? Right? So all of this is happening after. And I'm trying to point out to you in my little approach that I want to now deal with the before items first. So again, all of this here would be helpful for the after. And further down here, realizable value for C. So you're going to sell that off after. Funds raised from C, that's selling after. 7% taken over, that's happening after. At present, 10%. Even that you'll need to deal with. All of this is after stuff. Even Nedge is being created after. Tax rates, again, once you bring in Nedge, all of this is after. However, here is the first time the concept of current is brought in. So, as per usual, this is the usual ACCA trick. The easier notes in a list of notes, the easier marks sometimes, just like this narration here, right? Being easy marks, which we just completed, are towards the end. So you can fairly very well turn questions around like this, start with the end, start with the later notes, and see if you now can work from there backwards. So this is where I will start now with my current values first, right? Or in other words, the before. So get those out of the way. Those are easier and shorter workings. So we will need some information. $3 per share. What else do we need? And this is where I'm missing Natalie. Natalie loves to rattle off this piece here. Somebody remind me, take over Natalie's role there. What are we going to do with that $3? Nobody? Nobody? I don't get an indication when people is typing. What are we going to do with this $3 down here? I've indicated in my answer that we're going to start with I'm going to start with the before calculation first. And this is the only paragraph of notes that gives us before information. And we found that the current share price is 3. And what are we going to do with that $3? And Kenisa is saying calculate EPS. Well, that's one thing we could do with it. But there's something better we could do with it. In terms of, we are currently at the calculation phase of looking for the value before the acquisition. What else would PE, or not even PE, Stacey wrote PE as I was saying PE, but no, not only that. So PE, EPS, but that's the value of a share, people. That's the value of one share. So is that in the EPS, that represents what? The P in the EPS. In the PE, that represents the P again, the price of one share. But we are looking for, before the acquisition, the value of the two items. So get the total value. We're looking for the value of V and the value of T. And right now we're up here at V. So we have the value of one share. Really, find the total value of the company shares, which is now the value of the company. So how are we going to find this total value, Amar? And this is where I'm still missing Natalie, because nobody picked up on it yet. Nobody remembered what Natalie was doing in those sessions of ours. Right, number of shares. So good. So it's right here towards the bottom of your screen. Somebody find the number of shares for me quick. 190. Close, Stacy, close. Multiply number of shares by the market value. That's exactly what we want to do, Anita. But if we already have the market value now, which was the 3 outlined down below. I need a number close to what Stacy told us. That's not the number of shares. We need to find number of shares. 380. How did Amar get that? Oh, sorry. Amar is the one who said multiply number of shares by market value. Right. So Stacy is on the ball now. We either have to multiply by 2, or if we look at this concept here, it's 50-cent shares. So you're taking the 190 and dividing it by 0.5, which is equivalent to multiplying it by 2, and that'll get you a number of shares. So we have that. We're given market value of shares as 3. Number of shares, 190 divided by 0.5, and that's our 380. And just as Amar said, multiply across those, and we now have the value of company V. All right, so very, very easy and straightforward, but it was lost in the mess of all those notes down there, right? So if you have your head on and you know what you're doing, we have our first 10 minutes warning coming up. If you have your head on and you know what you're doing, you go and you find that first. You outline your strategy. We need the 2 values before and after, and we need the 2 values of what? We need the 2 separate values of the company, value of V, and in 3 short lines or in 1 line working, we have found that. Now we need to move on to the value of T. And here we will get into what Kenisa was mentioning earlier on. So that's where time ran out on me, and it was 8 o'clock. So we're given value of T information that the company's PE ratio is 25% higher than V's PE. Right, so that's what we have down here in the same paragraph in the before section. The only before section give us all the information together. That T's PE ratio is 25% higher than V's PE ratio. And then they move on to after. I really don't want to deal with after. I want to deal with before. So they only give me 1 sentence about values before. So how are we going to use this 25% thing? Can anybody say quickly while I start typing it up? How are we going to use that 25%? We also have what? I was going to say we also. We also have just found the value, and I could put in brackets total price. So this is where, when we can find those same 2 ratios, PE and EPS, Well, not EPS, earnings per share. Yeah, we can do that too. PE and EPS, we can use that. We can use totals to find those two values, as well as unit values. So we have also just found the value or total price of vehicle. So the level of earnings. Could somebody tell me if this is earnings before tax or after tax that we'll need to apply to find the PE? Come on, earnings. What's another value for earnings? Total profits. Profits or earnings before or after tax. Which level we're finding these earnings at? Come on. You all gotta know this. Right, profit after tax. Very good. Can be used to find VCO's PE. Right, so we have to find V's PE. So we have to find V's profit after tax. We have the price already, 1140. Let's move on to the statement here. If we can pull out profits from it. What do we have for V? We have for V. And it says saying calculate PE ratio at 25%, go backwards, get share value. Do we need to go all the way down to share value? Can you say, oh, would we get at some point the total value? So you don't need to go all the way down to share value and then multiply to get back total value. If you find total value before the share value, we run in with that because we need the total value of the two companies before and the total value of the situation after, right? So yeah, definitely that's where we're going. Getting the VPE ratio, and I'm looking for my numbers. What do I need to get PAT for V? It's in the middle of your screen. What are we given so that we can find PAT for V? Actually, pieces up for here and pieces down by the notes. What's the piece that I'm looking here to highlight? Come on, somebody call it out quick. Our first session has 5 more minutes. Pre-tax what? You see these phrases. Thanks, Stacy. The pre-tax profit. So we have the profit before tax, and all we have to do is times it by tax. Very good. And the 80% came from identifying down here that we have. Where's our tax? 10% tax. Note 6 right here. Tax rate applicable to all companies is 20. Good. Thank you very much. So punching that in. Come on. What's the answer Kinesa has there for us? So V goes total PAT equals 158, everything in millions here, 0.2 million times 0.80. I could scribble in somewhere here. Tax is 20%. And this gets us, I need an equal sign, total PAT equals 126.56, right? And we choose a number of decimal places and stick with it, right? 0.56 million. And this is earnings. And if we already have the total P above, then V goes P over E will now be equal to P of 1140 over its E of 126.56. Somebody punch that for me. Get us Vico's PE. Vico. That sounds like a cream. Vico. All right. Moving on. Somebody give me a number. 9.01. right? So 9.01. Great. So now that we have VCO's PE, how do we find TCO's PE? How are we going to get this 0.25? And Kinesia said that we're going to add on. How do we add on 0.25? Kinesia, what's a shortened way to add on 0.25? Very good. You times it by 1.25. Excellent. So go ahead. Don't wait for me now. Punch. 9.01 times 1.25 TCO's PE equals 11.26. Right, so 9.01 times 1.25. Right, so get answer use 11.25. We'll go with the 11.26 that we have. And now that we have that, well, why did we really find this? We found this so that we can now reverse what we just did and multiply. If we multiply the P, is it multiply or divide? PE times E will get us the P here. If we multiply the PE by the earnings, which is again, I could just say it's E, or profits after tax earnings of T, we would find its value, total value of P, i.e. Company value. Right, so I want us to get the word total here. So if we work with a total profit after tax. Good? Is that making sense? That's the basics of, but look at what we're doing. We are writing it out as a narration, and my first session is about to end. We'll bump off shortly and start back the second session as per usual in the same room very shortly. Right, so you could probably calculate that as we are about to get bumped off. But first we need the PAT of E. So PAT of TCO. Back to the same information. What is that? We already